Welcome to the fourth installment of CRDA's Resources for Resiliency series. My guest today is Mary Garcia, Regional President of the South Carolina Coastal Market for Pinnacle Financial Partners. We wanted to talk today about PPP, an acronym that I think every business owner in America now knows what that means, the Paycheck Protection Program. So Mary, I've been privy to CRDA's Executive Committee and Finance Committee meetings that you sit on both of those committees, and you have shared some truly eye-popping statistics about what the demand for these loans is. So could you talk about those for our listeners?
Sure, and thank you for having me, Mike. PPP came as a piece of the CARES Act, and it put $349 billion in loans for payroll protection. And the president signed on April 3rd a $2.2 trillion CARES package. And, April 3rd, the information was you can get your money on Friday, April 3rd, because the president's signing. And unfortunately, it wasn't that way. There was some miscommunication and people were desperate for money. Therefore, they thought that they could get their money immediately. And basically what happened when the first PPP loan package came out is the SBA didn't have their guidelines from the Treasury. Banks didn't have their guidelines from the SBA. And we were acting as a conduit between the client or the small business and the SBA. So we're funneling the applications through to the SBA, and then we're funding them and putting them on our balance sheet. So with that, it was overwhelming. I think in the first 10 days, my bank, which is a $29 billion bank, took over 13,000 applications in less than 10 days. And to put that in perspective, we typically take that many applications in a 2-year period. So and we're one of 4,000 plus banks participating in this program throughout the United States. So overwhelmingly, if you put it in further perspective, is the SBA did approximately $28 billion in loans in 2019 with 63,000 applications. The applications from those 4,000 banks have been over like 1.5 million applications, and for $349 billion in a 10-day period.
As I noted before when I introduced you, those statistics are truly eye-popping, but Congress and President Trump have responded, and there's now a second tranche of PPP loans. So talk about the first tranche and then what you foresee for the second tranche, which has just come out the door, I believe, in the last couple of days.
Right. The first tranche, as I said, was building it as the plane as it's taxiing down the runway. Every day, the rules changed, the facts changed, the application changed. And so it was difficult because, we were building a system and trying to push them through as fast as we could. We just didn't realize what an overwhelming response we would have to the program. And so we were very proud on the first go round when the money ran out. We had satisfied close to 7,000 of those applications and put out close to $2 billion in approvals. So that's for our bank alone, and we thought that we did a really good job. So we had a breath, and then PPP2 was announced, and we felt like it was going to come out. We weren't sure. When it did come out, we were prepared. We thought we were prepared. We had all of our applications put in. We were ready to go. We felt like all we have to do is push a button. We had it set up to work 24/7 to put these in, but we felt like the money was going to go really fast, and so we were ready. Well, once again, you have 4,000 plus banks all in the same mindset and had a little breather. So we all had time to get ready for this. We started putting the applications in, and the system was jammed almost immediately, just overwhelmed. And once again, you have to think about the number of applications and the amount of money going through this one system. So we're working in shifts 24/7 across our footprint, as well as other banks. Everybody's doing the same thing. So you have to realize that everybody's putting them through this one E-Trans system for the SBA, and it's just going to be a process, and it's slowed it down. Now, what I will say about the second tranche of money is that the SBA recognized that there wasn't a lot of fairness in that first flow of money, because it was a first come, first serve, and larger loans were done over smaller loans in some instances than through some banks. And so this time they've allowed tranches of money for your bank size. So you're guaranteed a certain amount of that next $310 billion. And they're limiting the amount of applications per bank that can be put in per hour. So it's a little more fair as to the process. The money, we do not feel like, because of how slow the system is, it's going to go as fast as we thought, but it will probably still be in that 10-day or less time frame as the first tranche.
So this is a conversation about finance and not about politics, but it does seem like we're going to need a third or fourth tranche to take care of all your customers. But for this question, Mary, please take a step back. This crisis, many have commented, is different than other crises. But if we go back to 2008, so sort of the high up view, the 35,000-foot view of the banking industry and the banking community, how you reacted in 08, the perception in 08, and what things are like now, and highlight the differences, please.
The 2008 crisis was really created by the investment banking industry. And it had to do with mortgage-backed securities and junk bonds and greediness and that sort of thing. And the downturn was really caused, ripples through the market where people lost their 401ks and their money went down, their values of the real estate went down, people had properties that they couldn't afford. So it was a heated economy, and it blew up. And it was really all related back to the mortgages and the stated income mortgages. So bankers took a really bad rap. The federal regulators during that time put the hammer down. And you have to remember, back then, banks were running capital at 6 to 8%. So, there was not a lot of liquidity in the system from a banking perspective. So you saw a lot of banks fail, and bad loans caused a lot of banks to fail at that time. Fast forward to this one. This is health related, and it has affected everybody all over the world. And it doesn't take any prisoners. It's from small business to large business. From who would have thought that the medical community would be affected the way it is by not being able to do their surgeries, et cetera. I mean, it's just stunning as to the broadness of it, and then it trickles down to the individual where they don't have a job anymore. So this, from a banking perspective, the banks are much better capitalized. I mean, you're running capital at 12 to 15%. So we're a little more resilient in that, and we don't know what it's going to look like. Not everybody's going to survive this downturn in this economy once again, and we're probably looking at a 3 to 24 month to see how it shakes out, and just to kind of get on even keel. I can tell you this time, the regulators and the FDIC has stepped in and say, make those deferrals, get these loans done, do what you need to do. So it's a different outlook, and it's a whole different feel. And to be honest, the bankers are actually, while if you don't get your loan processed, you might not be happy, but most people are so thankful. And the notes that we're getting and the lunches that are being served to their bankers, et cetera, to keep us working is incredible. So it's that trust factor has been rebuilt from that 2008 timeframe.
Well, Mary, thanks very much for all your thoughtful answers. And we are appreciative that you, and we know several other bankers in the community, about a dozen, invest in CRDA, and you're doing a terrific job. And as you point out, in 2008, in many people's eyes, you were the villains. And now, maybe along with the healthcare workers and first responders, you guys are the heroes. So we appreciate that. As noted earlier, we appreciate your service on CRDA's Finance Committee and Executive Committee. Keep up the good work, push those loans out through Pinnacle, and we appreciate your time this morning. Thanks very much.
Thank you, Mike.